Facebook or
this is
Instagram
YouTube.
Or not Instagram. YouTube? Okay, awesome.
Instagram's over there.
Yes, Instagram's over here.
Yes, there we go. We're live on YouTube. We promised
looking
YouTube
fresh
earlier.
This evening. There we go. Oh.
Thank you. I assume, I'm hoping you're talking to me. I'll take my.
It must be the lighting. We have a couple lights beaming on us, so but apparently lights and on camera there's a whole difference.
Could you maybe tilt it up, Mel?
I can, but I'm afraid it's gonna.
So it doesn't fall. Hey, YouTube. So we got YouTube going on. We got Instagram
YouTube.
Over here.
Hello.
Yeah, and absolutely.
There we go.
Both, yeah. Both. So again, we're kind of coming live to do a little bit of a chat. Yeah. If you have any comments, questions.
It's nothing formal. Tonight's informal. We don't have sometimes when we come live, we have a specific topic that we are discussing. But tonight we are just we're just going live for the fun of it and just kind of chatting about whatever you want to chat about. So if you have any questions or if there's a certain topic you want to hear a little bit more about, that's exactly what we're going to be doing today.
Yeah, let us know if you have any comments, questions. Make sure on YouTube, ask them below. On Instagram, ask them. We're talking some real estate.
Yes, real estate. We're talking about, purchasing properties using none of our own money without joint venture partners today. So we're talking about various strategies that we use. OPM, right? Things like owner financing, seller financing, vendor takebacks, RSPs or 401ks for our friends in the States. There's so many different ways and different strategies that you can use, because that's certainly something that we were told, that you wouldn't be able to grow very quickly. But of course, Dave didn't want to take no for an answer.
And that's what we were just saying in the presentation, the Q&A, and we were live with the Right Club, and that was one of the questions. And it was a father. He lives in Toronto. He has 3 kids, and he was saying, "How can I do this without doing joint ventures or without having partners or different things?" And again, how we did it, and I can only talk about how we did it and attest to our methods, but creative financing is what allowed us to do it. And what I mean by creative financing is the biggest one is seller financing. So seller finance, this is all the same thing. Yes. Seller financing, owner financing, vendor take back, it's all the same thing. It's where the owner seller participate in the actual financing of the deal. And that is the biggest game changer that you could ever do, is understand how to do that.
How to do it, how to find a couple of things. And I'm seeing, weren't we Comedy Wolf? I think was on our session earlier today, because we were live earlier on YouTube. So for you on Instagram who don't know about it, we have a brand new YouTube channel. We post videos every single week. So afterwards, make sure to go check it out and subscribe to our channel, because sometimes we only go live on. No, you'll have to switch.
How do I do that?
Oh,
here?
Boy.
Here? Account? Look at that. Switch profile. Look at me. This one?
That, yes.
There we go. Sorry. I'm going live all sorts of places here, and I don't know what I'm doing, so I need Mel to help me. But, yeah.
Love
so guys.
this channel. Thank you for loving our channel. And please share it with friends. So if you haven't yet, make sure to go check out our YouTube channel. Go subscribe or go follow us there.
Yes. Look,
as well.
Amrita, great question. Why would the owner want to? Did Alfonso go on?
I didn't see, because I'm kind of looking because I'm busy helping you.
That's true.
Alfonso,
please make sure to help me.
Alfonso often comes from the Right Club after we get off there. We often see him in our live session, but I'm not sure, because I haven't seen everybody that kind of came in. Okay.
Yes, but what I was going to say is, why would the seller want to do this? Why would they do seller financing or owner financing? Because it benefits them, okay? It 100% benefits them.
Yes.
And let's go over some quick and dirty accounting and not mindset, but the accounting aspect of it is the following: is when you sell a deal, whether it's with creative financing or it's with someone that paid you out 100% completely, and it's not creative financing, not holding a mortgage or anything, they are going to have to pay capital gains, which is just a part of real estate, right? Unless you're in the States, you do the 1031 exchange, but you're going to have to pay capital gains. That doesn't matter. what was I going to say? That doesn't matter where you are.
It's just a reality.
It's just a reality of real estate. When you buy a building, if you sell it for higher down the road, the reality is you're going to have to pay capital gains.
And think about it this way. A lot of sellers want capital gains.
Well, no, sorry. They're going to have to pay capital gains.
Or sorry, who wants to pay extra tax? Who wants to pay all the taxes all at once, right? Especially when you're not planning for it. Maybe you weren't planning to sell your property. All of a sudden, somebody gets sick in the family, or you decide you want to liquidate and sell. And the nice thing about using other people's money when it comes to VTBs, vendor take back, seller financing, owner financing, is that you can defer. They can defer those taxes. That's why they do it.
Exactly.
They do it because we aren't. We get a post. I probably get one post a day, at least one message a day saying, "Is this a scam?" or "You are a scammer." One of the two. No, it's not a scam. But I can't even get mad at those people because I used to think that too. I used to look at other people doing this. I'm like, how can that even be done? Well, because it benefits them. It works for them as well, and it absolutely can be done. It's a nice way to grow your portfolio because otherwise, you get stuck, right? I'm not sure, and feel free to share here if anybody has been stuck before. One of the questions actually that we asked during the live session today was, and I know a few of you were there as well, which is awesome. Thanks for coming on our page. But one of the questions, and I'm going to read the comments here, is, are you able right now, and be honest and share with us, are you able to buy one property a month? And yes or no. So comment below. We're going to read the comments here. Are you able right now to buy one property a month? And I'm going to rewind, 5 years ago or whatever, how many years ago that would be. And my answer would have been no. Oh my gosh, absolutely not. I'm working all day, every day. I'm working nights, I'm teaching part-time on top of working full-time. Dave was taking on every single possible overtime shift that he could to make that happen, but we weren't able to buy one property a month. But with creative financing, we bought 12 properties, and that it enabled us to help scale by using and leveraging wisely and ethically, of course, other people's money.
Yes, and Comedy Wolf here on YouTube. How long have YouTube been investing for? So 19 plus years combined.
Yes, I think now we're over the 20 mark. So now it's like
seems like it's been
a while.
There's questions on Instagram now. Yeah, and again, guys, if you have comments or questions or concerns, make sure to write it in there because that's the whole point of this, is doing some Q&A.
Yes. Let's go here.
How
do you find 100% board money? So there's honestly, it's look everywhere and be open to different ways, right? So you can find people, and think about it this way. People have money everywhere. Not everybody wants to be a real estate investor like Dave and I, or perhaps like you want to be. So they want to put their money to work. They love real estate, but they may not necessarily want to be real estate investors. So what do? They put their money to work by lending it to somebody else. Maybe somebody has RSPs or a 401k, and they're not happy getting low interest rates, or they're tired of it. They want a higher return on investment, and that's exactly what they get by leveraging it or lending it out to somebody else, right? So honestly, it's just a matter of do people know that you're even wanting to invest, right? So making sure that people know. We tell people all the time, hey, if anybody out there has RSPs or has a line of credit, it's sitting there not making you any interest, you want to invest with us, let us know. I'm going to show you exactly how I'm going to pay you back with my exit strategy. We'll make it a win-win. So make sure to just be out there, let people know that you want to invest.
Yes.
If they don't know you, they won't lend you money.
Ravi, how do you pay for renos? Is it usually out of pocket? Ravi, that'll depend. So let's say if it's a unit flip and maybe it's, you're doing a bathroom. So it's maybe going to be $5,000. Well, maybe pay for that, and or you've got that money. And that's the beauty of when you don't use your own money to purchase a building. Now you might have that line of credit that can absorb these costs until the refinance. So if it's a $50,000 project, then you typically borrow, we'll fund a flip, we'll borrow funds, and then we pay that investor or lender back when we refinance. Mark, have RSP and ready to go. Yes, Mark and I have been emailing. If I think that's the same Mark. I got you. I don't think I answered you back after you sent me your answer. So don't take that personally. It's because we were preparing for a presentation that we had tonight at the Right Club. But yeah, 100%.
Yes, the last minute. Oh, okay. Let's
The last
update
finishing touches.
Little updates, a few
We
slides.
were going to do it from home. We decided to come back to the studio and do it. Just better better lighting. The microphones are here. The setup is just easier and better. So that's why we decided to go live on YouTube after.
Yes.
And okay, Mark, yes, it is you. Okay, good.
Awesome, great. Legacy Home Investment, one of our action takers,
Absolutely.
Amanda and John. Hey, guys.
Hey, Amanda. Hey, John. Someone had a question there earlier. Yes, you keep moving too fast for me. I can't.
Do you have a wholesaling arm of your business that find deals for you?
No, not necessarily. The only time we've done, let's wholesale, if you want to call it that, is whenever we've had a deal that we weren't able to close on for various reasons, and we've decided to wholesale it to someone in our action family because we ultimately want to close on every single deal that we decide is a good deal. However, sometimes, like in March, we were doing a big refinance, and the banks, the mortgage broker said, just don't change anything in your portfolio until CMHC funds the deal. So we had to kind of wait for a couple of months, and so we had a couple of deals then, and we wholesaled them off to the action family members.
Yes, I'm seeing lots of no's here from my previous couple of yeses, but mostly no's from my previous question about buying properties one a month, right? And the reason I specifically one a month is because we did 12 and 12 months a couple of years ago, and now even through the crisis, we still purchased 119
as of today.
Units apartments as of today. Who knows? Do we have time to close on something else?
Now the issue is in December. Is some of the law firms are just saying we can't take anything till January. I love December. I love the holidays. I love family time. But we
even have 2 Christmas trees.
Yes,
one at the cottage, one at the house.
I don't like when things slow down because I always like doing deals. But such is life.
That's exactly a comment you said today to the team members. Like, I can't close this year. I gotta put it off because everything kind of.
Everyone else is
nice, but
slowing down.
As investors, we want to keep taking action. So if you want to buy properties, absolutely, it is doable with creative financing, right? And it doesn't mean you have to buy 12 and 12, but maybe you buy one a year. Maybe you buy 2 a year. Maybe you buy 3 a year, which is still fantastic, right?
Yes.
Any kind of
action. If it's the right property.
If it's the right property and you have your exit strategy, then it's still getting you closer and closer to whatever your goal is, whether it's retirement or just having extra income or being there for your parents.
And I think it's Snip Properties is asking, I live in California where property prices are high. Yes, they are. We do have mentees in California. It is doable.
Yes, we do.
San Diego, I think it is. And when I buy a property, it takes me a while to save up to get another. How can I speed that up? So Snip Properties, this is why we do creative financing, okay? And that's where when the owners help with owner financing, seller financing, that's where this is going to be your down payment. If you have to always save up your down payment, that's what slows you down. That's what puts the barrier between you and scaling. So for example, if you were to utilize, so here in Canada, we borrow RSPs as secured funds that we have to utilize as a mortgage. For you in the States, let's say you find a deal and the owner doesn't want to have anything to do with owner financing. Okay, that's fine. Now you would find someone with 401k, Roth IRA, and there's different types of, not agencies, but different types of, I can't think of the word, where they would basically transfer their secured funds and then in turn, and this is the attorneys that are going to do all this, but they would give you a mortgage on a property. And in this case, this could be your second mortgage where that's your down payment. That allows you to get into the asset without having to save up your down payment. And that's how you can scale, by doing that over and over and over again. But again, you have to make sure you're buying the right deal. So as I'm saying this, yes, it sounds great and it sounds easy. However, you have to find the right deals, because the most important thing when you're borrowing someone else's money, and we can never stress this enough, don't touch a cent unless you know how you're going to pay them back. That's how you're going to get yourself in trouble.
Yes, absolutely.
So that's how you do it. But please, please, please don't touch anyone's money unless you 100% know how you're going to pay them back. Otherwise, you're setting yourself up for failure. And let's see here, YouTube.
I see here, Robert. Would love to hear why I'm here to hear more. Yes, absolutely. And it is that all of that. And we're actually having, I wrote it there, so you might want to take a snapshot of the phone here or write it down. I don't know if you're able to type it in YouTube. there, Dave.
Yes.
And I'm not sure,
Was
are we
it?
still live on Facebook or did that close?
No, it was.
Oh,
It was.
glitchy?
Yeah, it was glitchy.
But yes, but on December, we weren't going to do it, but then we kind of decided in the last minute that we were going to do it one more time for this year on December 10th. So not this Thursday, so not tomorrow, a week from tomorrow, we're going to have a whole 1 hour and a half live session about how we bought all these 119 units in 2020 and how we did so using our own money and without joint venture partners. We're going to show you some of the deals that we do and how we structure and all that kind of stuff. So if you are interested in joining us in the session, we always do Q&As as well. You have to pre-register though,
Yes.
but I pinned it here on
And I
Instagram.
pinned it on YouTube. You have to put the www.
Yes. So,
otherwise, it's going to bring you somewhere else.
yeah, I love opm.com. It's about an hour
I
and a
love
half.
that website. I love OPM.com.
Yeah, we talk mindset as well, because sometimes that's people only talk numbers and then they wonder why they don't get results. And mindset is just as important, if not more, than crunching numbers. Because
people put it on the back burner though.
They do, because it's like it seems fluff.
They think it's boring, but this is the rest. You're going to own this asset for 30 years. If you don't have the right mindset, the foundation. Yes, I agree.
I remember when I met you, 25, young firefighter.
Thinner. Just saying.
Just a little bit. That's okay. But yeah, so when we first met, you were so dedicated and you knew it. You know, you could feel it. You're like, I'm going to be a millionaire by the time I'm 30 through real estate investing. Yet you didn't have the mindset. Like you partially had the mindset because you wanted to do it, but that fear and the lack of action of actually doing it was holding you back, right? And then my fear, my lack of action kind of came afterwards.
Yes.
And so we'll be talking about all that, and then we'll be showing you some deals. So if you want to find out more, make sure to register for that as well. Yeah,
again, you're coming out with us for an hour and a half, and we're going to do a Q&A there as well.
Rentals to retirement, OPM, you can buy $1 million a month. Well, and that's the thing, you become limitless as long as you do it wisely, strategically, and you have your exit strategy. Strategically can be so powerful.
Yes, and there's a question here on YouTube, Ravi. Let's say owner is willing to do a VTB, so vendor take back, on a 16-unit apartment building. Awesome, but you don't have much in your RSPs to fund the reno, which, Ravi, honestly, you're not going to touch your RSP anyway. Those are secured funds.
And we should clarify that, because we often say that, hey, you can use your RSPs. You can use somebody else's RSPs to fund deals. So we just bought a cottage, for example. Of course, we weren't going to use our own money. So it was fun. It was, no, it wasn't overfinancing. It was a traditional, or it was mortgage broker, sorry, in first place, and then RSPs in second. But it wasn't our own RSPs, it was somebody else.
He's saying it someone else.
Okay.
Yes, 100%.
All right, perfect. Just
so
make sure.
The other person's RSPs will have to be a mortgage. Let's say owner is willing to do VTB on a 16-unit apartment building, but you don't have much RSP to fund the reno. What can someone do to fund a big project like that? So what I would do is, and I don't know if the owner's holding a first or second, Ravi, but usually vendor takebacks, they're holding a second. So if you can get an institution that is okay with you having a second mortgage, then you get them to basically hold your down payment or be the down payment. Now the RSPs has to be second. Yeah, okay. So the RSPs has to be a mortgage. So you're not. I haven't seen it. I'm not saying someone hasn't done it, but most likely you're not going to use someone's RSPs to fund the deal. It's going to be more of a down payment type situation or mortgage situation. Well, it has to be a mortgage. What I would say is that when we have big projects on the go, that's when we use promissory notes / contractual agreements, because those are going to be liquid funds that the private lender, private investor is investing in you. You show them what you're going to do with the money, what your plan is, how you're going to pay them back. And that's where we fund our bigger renovations, is through those contractual agreements, promissory notes.
Yeah, because usually we don't, I mean, if it's just a little bit of money, then yeah, we'll use our own. But if we're doing huge flips or we got to put quite a bit of money, again, we want to continue to scale and keep our money as the backup. So that way that's why we would use in that case that. And I see lots of people and lots of comments on YouTube, and thank you for that. And if you are new to following us, make sure to subscribe to our channel and hit the bell to be notified, because we go live like this. Sometimes it's exclusive. We kind of do exclusive sometimes on all platforms. Sometimes earlier today, yesterday we had a podcast, and it was only exclusive for Instagram,
Instagram, yep.
and sometimes we only do exclusive for YouTube. So, or kind of, and sometimes we do everywhere all at once. But so yeah, make sure to hit the bell, be notified, and if you're on Instagram, follow us on YouTube, and if you're on YouTube, go on Instagram, because we provide different kind of content everywhere. There's video. I don't do one video and post it all over. YouTube and Instagram is Instagram, so you'll get different kind of content.
Yes, that's the thing. We do different content on different platforms. Citadel Electrical Systems had a couple of questions. Wanted to PM. Where should I send to? If you have comment on the PM is private message. Can you do that on YouTube? No, it's in the comments. Maybe if you're following us on Facebook or Instagram, maybe you can do it there. Citadel. So I guess I was going to say here, but that YouTube, I think, is just the comment section.
What's your rebuttal? I make 7% in my stocks. Okay, so somebody says, I make 7% in stocks. Why should I risk my money with you for 8 to 10%? Very simple. I'll say, because here is my exit strategy. I'm very, very transparent with my lenders. I show them exactly, if the deal's not listed anywhere, they may not. But if it's just a private lender, they want to transfer their funds. I would just simply show them my exit strategy. This is the property. This is the kind of property. This is how I plan on paying you back. It's backed up with real estate, and I think a lot of people now more than ever love buying or love investing in real estate. And think about it this way: even during the crisis, we were an essential service. We expanded. We had growth.
Our team didn't stop.
Yeah, we
housing.
Didn't stop. I mean, we had to shift, and we had, of course, to have safety measures and all that. Absolutely, everybody's safety is important. But people still need water, food, and shelter. We were one of those services, which is a pretty neat feeling when you think about it as an investor as well.
Well, yeah, you're providing one of life's essentials. Yeah. Now, rentals to retirement. When someone tells me that, I'm making 7% in my portfolio. Okay, is that before or after you're paying the 2% to your broker, or 2.5 or whatever it is? So are you actually making 9 and only getting 7, or is your 7 what you're making is what you're getting, and then you're still having to pay them 2%, which is now 5, which is half of what, let's say in your example, the 10 is. So that's one question I do ask them when they say that. Marco on YouTube. Hi, Mel and Drake. That's obviously a typo. Me and Drake do look a lot alike. We are Canadian. I know you meant Dave. Finally, I have the fortune to watch you question: is it possible to apply the rent-to-own methodology in Canada? Yes. I looked into this heavily beginning of 2018. And Marco, you can make so much money in so many different ways with real estate. You can do mortgages, private lending, you could do rent-to-own, you could do Airbnb, flips, buy and hold like us. So there's so many different ways. Can you do it? Absolutely. The thing I don't like, and this is what I go more in depth with our mentees as to why, is that you don't own the asset. So you're hoping, I own the house, I own the property, and I sell it to you, Marco, rent to own. You give me a big down payment. You have to give me, $25,000 non-refundable. A deposit, non-refundable. So when you move out in a year, too bad, that was in our contract, you're out $25K. The thing that that worries me is it depends on which side of the equation you're at, but basically you're hoping that someone at the end of the year, the end of 2 years, the end of 3, the same opinion and mindset as they were when they initially did it, right? And if let's say they said, I'm going to sell it to you for X, and at the end of the 3 years, they're like, you know what, the market, yes, you have a contract, yes, you have a legally binding agreement, but if they decide, I'm not selling you this building for that price, now you're going to have to sue them, right? That's what I don't like, is that you don't have the asset until it actually goes through, and that could be months, years down the road. So it's almost like a firmed offer that just has a very far closing date. But again, you're hoping that that person doesn't change their mind, that circumstances don't change. What if they die, right? There's things like that. Are the beneficiaries going to want to keep that deal? Are you going to be up, what creek? So that's why I don't like it. I like owning the asset right away, and then, hey, I'll refinance and pay you back. But at least you own it, right? You can't change your mind. My name's on the deed. So anyway, that's my opinion on that, Marco. Hopefully it makes sense. But a lot of people make a lot of money, so don't take just my advice or my opinion.
Reno with curls, even with vendor take back.
Sorry, it's all good.
Don't you have equality with collateral, etc.? Isn't that a limitation when buying this way?
Sorry, I don't understand the question. What
Even
was
with vendor
it?
take back.
Even with vendor,
don't you have to qualify for with collateral, etc.? Isn't that a limitation when buying this way? I mean, and I think to qualify, right? Are you putting it against other collateral?
No.
We don't. So I know some people do. We don't like doing it that way. So we personally don't do it that way. I know that some people do. We personally don't. And I mean, there's different deals. I mean, there's deals that this property, there's not even a financial institution whatsoever. It's 80% owner finance, 20% RSPs. Sometimes we gave an example. We were with the Right Club this evening doing a presentation, and we analyzed they were two new ones. We never showed those two ones to anyone before.
Are those going to be in our presentation next week?
Yeah, maybe we can update that one. Yeah. So there we go. So www.iloveopm.com if you want us to actually show you analyze deals, like we'll show you the numbers and how we calculate them. So join us for that. But yes, we basically show the deals on how to do that. So honestly, yes, I've heard some people do it that way. We personally don't, though. And I mean, we've purchased 12 and 12, but again, ratios. You got to make sure that your ratios make sense from the beginning. Thanks, Melanie Dave. Sorry for the typo.
You let me make a joke out of it, so it's all good.
Yeah. No worries, Drake. I'll call him Drake now.
Giorgio, hello, Mel and Dave. Just dropping to say hi, support you, love the channel. I'm at work right now. Awesome.
Hey, awesome. Thanks,
Giorgio.
Thank you so much for saying hi.
That's amazing.
Awesome.
Thank you for watching the channel. Love it. I love that you watch it.
I love that you watch it. We have a different kind of YouTube video coming out tomorrow. It's a walk. We're walking through the property.
We're gonna start doing more of those.
Yes.
So if those videos do well, we're going to do a lot more walking through our properties.
It's our first. Okay, so you know how sometimes you do things like, it's good, but the beginning we analyze them like, the mics are off a little bit because it's vacant. So it's a little echoey.
It's definitely echoey.
Hey,
especially. Go ahead. Sorry. Go ahead.
I was going to say we're rookies at it. We'll improve with time, right? Hello.
Yeah. So thanks, Giorgio. Enjoy your shift at work. If you guys have any more questions, excuse me, I went to yawn there and it kind of like bypassed. But yeah, if you have any more questions, don't hesitate to put them in the comments. You know when you have that sometimes when you yawn, it's just and sometimes when I sneeze, it's right there. It's like, anyway, you guys.
How do you approach seller to do vendor take back? What do you say?
Approach seller to do vendor take back.
Honestly, and just kind of keep it brief. We tell them the benefits, right? We explain all the benefits to them, and we explain why they should do it, and we show them the exit strategy. People are not going to want to lend to you if they don't know how you're going to be paying them back. So get educated on it, know exactly what are the benefits, understand the taxes and that kind of thing. So that way you can speak about it. You can speak about it, and then why should they do it with you, right? What are your advantages? So make sure to explain that to them as well. What happens when you lend money from a 401k or is unable to pay back? Oh no, I hope that didn't happen to you.
And a 401k is going to be it's secured funds. So it's going to be in the form of a mortgage. So just like any other mortgage, if you don't pay the bank your mortgage, what do? They're either going to foreclose on you, or they're either going to go power of sale. So because you have that mortgage, and it's all honestly, I forget whose name was.
SNL.
So SNL, honestly, you contact your attorney.
Sorry, that's the next question.
Contact your attorney. They do this every day, right? Once it hits, what is it, 15 or 30? I'm not an expert. I'm not a lawyer, right? I'm not an attorney. But once it hits a certain amount of days late, then they send a letter. And then once it goes a little more late, they'll assign the rents if it's an income property, or they'll take over the rent. So it's a whole process. But again, because it's secured funds, it's going to be exactly the same process as the banks do it.
Do you guys lend money out if it's the right deal? No. And the reason is because we keep our money as a backup. So we're continuing to be in acquisition mode. In fact, we're always looking for lenders who have RSPs or 401k or a line of credit that they want to put to work. So no, we don't lend out as we're continuing to. We're not we're not stopping anytime soon. We're on our way to continue to grow our portfolio. We want to buy in various areas as well. We have some goals. And think about this, we have some goals for 2021. We're not waiting for 2021 to start taking action on them, right? So it's something that we've been working on for quite a few weeks now. So that way in 21, you're already ahead of the game. And that's the nice thing about December. And I'm glad you guys are here tonight because you're one of those people. You obviously have the right mindset, because some people are like, I'm just going to lay back.
It's December.
Let's wait till January. And you're here right now, spending time educating yourself and all that. So that's fantastic. What's an RSP? Yes. So it's RSP, so registered
retirement savings plan. So it's 401k for Canadians.
But you can do the same thing as well.
Yeah, it's secured funds.
And Jesse. Oh, Jesse's from North Bay. Hey, Jesse.
Yes. Hey, Jesse. And YouTube, if you guys have questions as well, don't hesitate.
Can you buy a house with bad credit? And that's always a tricky question, right? Do I know people who has bad credit that bought houses? Yes. Are you looking to do creative financing? Are you looking, that's kind of what I'm thinking here. Is it, did you go bankrupt? If you went bankrupt, it's going to be harder, of course. If you're looking to do creative financing and buy a house with bad credit, I would just say, think about it this way. If you have bad credit, do you have access to some liquid funds still? Because that's number one. At least start off with that. Start getting some liquid funds in, because don't go buy the house and then you need to change the toilet and you don't have the money to pay for it. So start off by saving, right? Reduce the debt, increase the revenue, do whatever you need to do. And I mean, whatever you need to do is important. And sometimes our pride get in our way. And, okay, now people sometimes look at us, they'll be like, oh, well, you have it easy. You have the house, you have this. And well, yeah, but we used to shop at consignment stores. We used to buy the used cell phones on Kijiji or online, right?
I used to buy my Blackberries, drive 40 minutes down the highway to save $50 or whatever, which worked at the time. And if you're doing that, hey,
that's
it is
awesome,
what it is. Nothing wrong with it.
And I do love
Depends
it, because that means exactly, because you're in this part of the cycle, and that's awesome. So so just keep reducing expenses and increasing revenue as much as you can.
I've got one here on YouTube.
Sure,
Giorgio,
go ahead.
Mel and Dave, what about commercial real estate? Is that a good investment? I watch Manny on YouTube. He only does commercial real estate. Giorgio, okay. I'm a residential landlord, so I like apartments. Do we buy commercial? Yes. And by commercial, I mean actual commercial units.
Purchased a few this year.
Yep. Even the lawyer, even our attorney, we were closing the last deal on, we closed it, we signed Monday and we closed Tuesday. So you guys are getting into more and more commercial, right? Mm-hmm. But what we do, because again, why I love apartments is because people will always need a place to live. That's not going away. COVID, pandemic, coronavirus, COVID, whatever you want to call it, that's not going away. So the way I look at a deal is, yes, I'll buy something that has commercial, but it's anchored by residential real estate. Okay. What I mean by that is, even if all the commercial units were 100% vacant, the apartments in that building are paying for everything. I'm at least breaking even. So yes, we do buy commercial units. I haven't bought in a building that's just commercial. It's always anchored by people that put their heads on a pillow at night.
You've looked at some, and I'm always like,
I know, I pump the brakes on it.
Yes.
I just get, especially now too, and it depends what it is. Box stores, I'd be scared. I'll chain or those types of things. Now I'm thinking the ones that we have, different commercial tenants. One's an optometrist, barber shop. You can't cut your hair online, right? You gotta go into the barber shop. You can't check your eyes. Oh, I don't know if you can or not. But so those are the types of tenants that we have. Some of them are restaurants, which again, they're doing online delivery and they're allowing pickup. So it just depends on what the commercial is as well. But I anchor it with some residential.
Yes.
I've got another one here.
You guys are killing it. Bravo. Oh, thank you.
Thank you.
MBJXR. Not sure how to pronounce that.
Thank you.
Thank you. Braden, how do you buy real estate with none of your own money? I have a few properties and have no money left. Where do I get the money from? We've been there.
That's
exactly
the
it.
typical roadblock.
Yes.
You buy a few.
You bought a few, and then you
you
get stuck.
Get the note.
Because you run out of money, that 20% down, or you refinance and then you can't keep buying other people's money, owner financing, seller financing, RSPs or 401k. That's what helped us achieve success. And that's how we're both able to quit our full-time jobs in our 30s.
Okay, Paulo from YouTube. Hi, love the channel. Been learning tons from your videos.
Oh, nice.
That's awesome, Paulo.
Thank you.
Where did I leave off? Hoping to buy my first income property soon. So my question is, what would be a first income property, like a duplex or triplex, etc.? If I was to go all over again, Paulo, I bought a single family dwelling at first. And I'm not saying don't do that, but I would buy something that at least has 2 doors, because you're getting in that multifamily section. So that's what at least 2 doors. Because again, if someone moves out, you're not 100% vacant, you're 50. Triplex even more. But again, it has to be, I'm not saying buy a triplex over a duplex. It has to be the right deal. You have to make sense of the numbers. And yeah, but I would definitely, if you gave me a specific choice, if you said, David, duplex or a single family dwelling, I would say duplex. So hopefully that answers your question. And thanks for following, Paulo. That's awesome.
How old are you guys?
How old am I?
You make fun of me when I say that.
It's because I keep thinking I'm 34, but I keep thinking I'm 33. I don't know why. Like, it just, for some reason, I forget about this birthday.
I got stuck at 32, and I stay there. But I'm older than 32 now. I'm 41. 41? 42?
Yes.
41.
Yes.
So there you go. We're getting any other personal questions.
Yeah, what else do you guys
want to know?
Well, there's one guy on Instagram that comes on whenever we go on. He says, I want you guys to kiss. He hasn't come on yet.
Not yet. Robert, love watching your videos and learning more about investing. It also gives me a break from Netflix.
There you go.
This is the kind of good Netflix. So there you go, Instagram. If you haven't subscribed to our YouTube channel,
yeah, check it out.
Check it out. We have quite a few videos now. We release a new one. We go live. And for those already on YouTube, thank you so much. If you are just happen to run on our channel, make sure to subscribe and hit the bell so you can join us next time we go live as well. Because sometimes we go live only on Instagram, sometimes only on YouTube. So that's awesome. And thank you for those. You guys are so nice. Just full of compliments.
Yeah, no, keep them coming.
And thank you. What's the cap rate in North Bay? North Bay is where we live.
Somewhere between 7 and 10. But now it's starting to get more competitive. It's starting to be more 6-7, but you'll still see a 7 to 10 cap rate.
Yes. And YouTube, please keep asking us questions as well. What are some things to take into consideration when buying out of state? Honestly, your team, investor-focused accountant, investor-focused lawyer, investor-focused insurance company. So make sure, investor-focused property management company, absolutely. You want to make sure that everyone you're working for are investor-focused. So during the acquisition, making sure you get the right person to go through the house and all that, making sure you have the right construction crew or maintenance crew as well. So just really your team and doing your due diligence just like you would here, right? I mean, we've purchased properties where we haven't personally walked through, even in our own city. We sometimes might as well
have been across the country, right?
Well, sometimes we've been in Florida and we're looking at deals, right? When we're vacationing. We continue to look at deals, but with technology now, you're able to look at us. We're all connecting from across North America, or maybe even further. I know sometimes there's various places as well, but so do your due diligence, right? Walk through whether if you can't in person, make sure somebody you can, ask for videos, ask for pictures, do your Google search, look around as well. What are the areas like and all of that. So do the same due diligence as you would if it's in your city, but even a little bit more.
And just make sure the team that you have is dotting the I's, crossing the T's, liability-wise, right? They are an extension of you and they are representing you. So make sure that they're doing anything and everything that they could be to limit liability. The last thing you want is a lawsuit and you realize that they didn't do X or they didn't do Y or they didn't do Z, and your lawyer and attorney is looking at you like, who did you hire to manage your
Mhm.
property, right? Like, what were you thinking? So, and you're not giving your lawyer or attorney a leg to stand on.
Yeah, absolutely.
But yeah, so definitely do that due diligence and make sure you hire someone that is going to have your best interest.
Yes, awesome. So if you want to find out more about OPM and you haven't registered yet, make sure to do so. www.iloveopm.com. We're going to be live for an hour and a half next Thursday. We're going to share a presentation. We're going to crunch some numbers. We're going to talk mindset. We're going to talk about a bunch of different things.
Come hang out for an hour and a half with us. Q&A at the end.
Yes.
And so yeah, go to www.iloveopm.com. The other thing too is YouTube, you're obviously on there.
You have to pre-register. It's not a live. It won't be a live like this. It's a live session on a certain platform, so we can actually share our PowerPoint
screen and all that. And the other thing, Instagram. If you're not following our YouTube page yet, tomorrow we're releasing a very cool video where we walk through a building, we analyze it, we break down the actual costs on a whiteboard. What did we purchase it for? How much did we put into it? What were the carrying costs? What was the renovation expenses? What was our total cost? What was our total sale price? And what was our total profit? So if you want to see a cool video.
And was it a good one or was it a bad one? Because if you've been following us, you know we've made a lot of big mistakes. So we'll see
big mistakes.
Yeah, so we'll see if that one's a big mistake or not.
But you'll actually get to walk through the building with us and see the renovations. This was a nicely done building. But yeah, if you're on Instagram, go over to the YouTube page at some point, subscribe, because that video comes out tomorrow at 6 p.m. Eastern time, I think.
I believe 6 p.m. Although
our team they fluctuate the times. But again, and go check out the other videos. But yeah, sign up to the webinar, guys. Next Thursday, we're gonna chat, and looking forward to it.
I don't see any other questions. So I think are we wrapping it up here?
I'm going to bed. We're in the studio. I'm driving home.
Yes, good thing we don't live too far. So thank you so much, everyone on Instagram. Thank you so much, everyone on YouTube as well. Keep following us, and we'll chat again soon.
Bye for now, guys.
Bye for now.